Welcome to Second Take, the show that focuses on the issues behind the news. The platinum group metals market may be heading for three-way price parity, says Northam Platinum CEO Paul Dunne, whose company has increased its operating profit despite the market's challenging business conditions. Martin Creamer joins me in studio to discuss this further. Hi Martin.
Hi Tracy.
So how is the company tackling the difficult PGM's market conditions?
Well, it's got an amazing approach because it's got firm belief that there will be supply constraint. So while other companies are shedding their assets, the Northam company is acquiring many of those assets. And not only that, but it's spending a lot of capital on new development and expansion. So it's based on a very strong belief that the shrinking of production, especially in South Africa, but Southern Africa, is going to put them in a pole position when the upturn comes.
And then how is Northam going to fund its significant expansion?
Well, it's going to spend like 1.3 billion rand in this financial year, and of course its financial year goes to the 12 months, June 30 next year, and that it believes will be a self-funding operation. So the word self-funding is key at this point because you find that raising capital is not easy in these markets, but if you're generating that cash, it's a good position to be in because you don't have to raise equity, you don't have to go get more debt. You can fund those expansions, and you can see they've done fantastic work at Booysendal, on the eastern limb of the Bushveld complex, but they're also holding their own on the western limb with their stand at the long established Zondereinde mine, where there will also be they're building an expansion to the smelter because that has been a constraint. You'll see they built up quite a lot of stock, but that of course also boosted their balance sheet, and they will be able to liquidate that stock going forward as the drying plant at Zondereinde and then the new furnace is commissioned, which will be before the end of the year. The drying plant, in fact, is already commissioned.
And the company has attributed mechanized Booysendal partly to its 60% increase in operating profit for the year that was currently under review. How is the mine's tailings project going to boost the company further?
Well, that tailings project is always something that you look at in these times because that is material that's already on surface, and you'll find that mines who work in deep and dark situations, they find it a blessing when they've got dumps on surface from which they can extract the metals that they mine at depth. And again, this is placing an opportunity for Northam, particularly in chrome. And a lot of people are concentrating on chrome at the moment because the price has risen quite substantially, and they've got a very good trading relationship with Glencore. They're also going to probably acquire the Eland mine from Glencore. So that gives them a nice access into the market. So with this new tailings plant, that offering of chrome will lift and get them good revenue because they see the chrome price potentially getting back to $200 a ton, which will be a nice position for them. But at the same time at Booysendal, where they've increased their production, I've been down that mine. It's really a pleasure to go down the declines, and to sit on the chairlifts with pleasure while you're having a look around, see a jolly work crew going into a mechanized situation. And you can see the results of this mechanization. It's definitely bearing fruit. It's different, obviously, to the Zondereinde one, where they've got to do conventional mining. So they've got on the western limb conventional mining, on the eastern limb mechanized mining, and you can see the big difference in the output and the costs. So mechanization, if it is possible, definitely saves you a lot of money and gives you good production and low unit costs.
But why does the PGM's price performance continue to be lackluster?
Well, I think a lot of analysts and journalists ask that question every time they go to, some platinum presentation, because they keep on saying, but, why isn't this price lifting? There are clear signs that supply is declining. is there something on surface that we don't know about that's keeping this price up? It's a bit of a mystery, but one of the blows dealt to platinum was the scandal in the United States with the emissions from diesel vehicles. The platinum business was very Eurocentric, and it got a lot of its revenue from the diesel vehicle using platinum in the autocatalysis system that cuts down on emissions and pollution going into the air of the big cities of Europe and elsewhere. When that scandal took place in the United States, and Volkswagen was found to be overstating the emissions that it was supposedly stopping from going into the atmosphere, it gave a very bad name to diesel. And you're finding that even in Europe, people are turning their back on diesel, which means that they're going into petrol-driven vehicles, which is reflected in the palladium price rocketing. And, you know, your opening statement there, that there seems to be a parity arriving, a three-commodity price parity path. We're almost arriving at that. As platinum falls, it falls into palladium and rhodium, which shouldn't be, because most of our mines, you know, are heavily reliant on platinum sales. It's about 60% in the case of Northam, so they really are platinum miners, so they want that price to be good. Whereas the Northern Hemisphere benefits more from the palladium, and at that price is lifting, in fact, quite well. But they still obviously produce palladium here, so they get the benefit of that, produce rhodium here, and get the benefit of it. So the basket is fair, but not where it should be to make the platinum business a good business.
And what is Northam doing to market platinum? And why does it believe that this strategy is vital?
You know, when I used to cover the platinum business 30 years ago, and a big player was Johannesburg Consolidated Investments, you would go there, they wouldn't talk about production, or all they would talk about is marketing, and more marketing. And that sort of ethos was lost. And we have a situation like in platinum jewelry, where South Africa has got a fantastic asset. I mean, we just see the platinum, but in platinum jewelry, we have really got a huge stake. Because for 45 years, South African companies have been plowing money into Platinum Guild International. And Platinum Guild International has been studying that market. They know the consumer. And they know that, you know, if you market in particularly third-tier cities in China, you're going to get a return. They've only been able to penetrate like 15 to 20 of those, whereas there are like 250 of those. So the story coming out of Platinum Guild International is that, look, put more money into this. Don't pull back the money, as the platinum industry has been doing. They've been lowering their budgets for marketing because they've been under such pressure. They've been arguing, look, if you want that extra growth, which you need to get the price going and extra demand, because you're growing demand, let us have a solid budget so we can go into the places like China, where they say what they term a lot of white space, a lot of opportunity to market. We can go into India, which is just growing exponentially, of course, off a low base. It's only at about 200,000 ounces. We can even do things in the United States, where if you just change the little holder of that diamond on the engagement rings and turn that into platinum, it's like 150,000 ounces. And it is the best thing to do, because platinum has got greater density, so it can protect that diamond, keep it safe. So there's a good argument for it. But if Platinum Guild International hasn't got the funds, it can't do this, and it's already pulled out of Europe. So Europe must look after itself, and you find with these markets that's not good enough. But anyway, you know, a company like Northam is saying, look, we're relatively small to actually get involved, but we believe the message of Platinum Guild International, which is why, even as a small company, we're lifting our funding into that jewelry marketing space by 80%, and going from, you know, $500,000 a year to $900,000 a year. They acknowledge, look, this is not enough. I think it is so big that South Africa Incorporated should be putting its head together and saying, how can we market jewelry better? Because this has become a South African asset. We put so much money into it, and we believe in beneficiation and everything else, but let other people also do it for us to create that demand for local platinum. So the idea is that they would also, make sure that they're making as much contribution as they can at this stage towards promoting platinum jewelry, which creates the demand for platinum, so that they can get, I think they were estimating, if you market well enough in China, you can do another 3.5 million ounces demand into these new areas. So hopefully it will take place. Hopefully more effort will be made, because I'm sure they could broaden the base, because at the moment it's only the mining companies that actually contribute to this. Who knows, there might be some private equity companies who could come in at this stage, because they find that it's a numbers game. And they found that $1 investment into jewelry in China gives you an $81 return. So it's not as if it's a good proposition. So hopefully people will go with it, and we can see Northam is trying to do their bit as much as they can.
Thanks, Martin.
It's a great pleasure, Tracy.
That's it for today. Join us again next week for more news analysis on the South African mining industry.